Hello and welcome. Today we are discussing standard 2110, which is governance. This is the second standard of series 2100, which we started from the last vlog, Nature of Work. The governance is a very important topic, and all these three standards which are coming now, governance, risk management, control, I would advise all auditors to spend time and understand, listen these videos also. These are very crucial aspect of when you're doing audit, because governance, risk management and control touches all the aspects of your audits. So please focus on these three always and try to understand the crux of what this standards wants us to understand. So as per our customary practice, let's start asking some interesting questions and try to get responses to those questions while we review this standard on governance. Why is a single audit of governance not attempted? To assess and recommend ways to improve governance practices, how internal auditors can act. An organization designs and practice of the principles of effective governance depends on which factors? How is governance defined as per IIA standards? Why assessment of organization's governance process is important for internal audit function? And from governance perspective, which processes auditors can assess and make recommendations to improve? So let's try to get responses to these questions and get off to a start. For those who are new to my videos, my small introduction is that this is Tausif Mushtaq, control specialist and audit strategist and a board advisor with over 2 decades of experience in governance, assurance, risk and controls, fraud examinations and forensic reviews. The objective of my videos in the audit and assurance series is to promote the internal audit profession in its basic spirit, whereby the internal auditors having a clear understanding of these standards and international professional practices framework overall, so they can contribute to achieve the mission of internal audit. The mission of internal audit is defined by the Institute of Internal Auditors, which is to enhance and protect organizational value by providing risk-based and objective assurance, advice and insight. Governance does not exist as a set of independent processes and structures. Rather, governance, risk management and control are interrelated. Let's try to understand this concept while we review this standard as well. So the basic requirement of this all important standard 2110 governance is the internal audit activity must assess and make appropriate recommendations to improve the organization's governance processes for making strategic and operational decisions, overseeing risk management and control, promoting appropriate ethics and values within the organization, ensuring effective organizational performance management and accountability, communicating risk and control information to appropriate areas of the organization, coordinating the activities of and communicating information among the board, external and internal auditors, other assurance providers, and management. As per Assurance Standard 2110A1, the internal audit activity must evaluate the design, implementation, and effectiveness of the organization's ethics related objectives, programs, and activities. The standard 2110A2, this is the second assurance standard within this standard, requires that the internal audit activity must assess whether the information technology governance of the organization supports the organization's strategies and objectives. That means we need to see the definitions of governance and the IT governance as well. To fulfill this standard, the Chief Audit Executive and the internal auditors start by attaining a clear understanding of the concept of governance and the characteristics of typical governance processes. They should also consider the formal definition of governance as per the internal auditing standards, which is given in the glossary, and become familiar with the globally accepted governance frameworks and models like COSO framework or ISO 31000. So while we review and understand the implementation guide, let's get the understanding of the definition of governance and IT governance as per the glossary of internal auditing standards. As per glossary, governance is defined as the combination of processes and structures implemented by the board to inform, direct, manage, and monitor the activities of the organization toward the achievement of its objectives. The IT governance is defined as consists of the leadership, organizational structures, and processes that ensure that the enterprise's information technology supports the organization's strategies and objectives. The Chief Audit Executive's approach to assessing governance and making recommendations to management will vary based on the framework or model the organization uses. Globally accepted governance frameworks and models like COSO framework, the Committee of Sponsoring Organizations of the Tradeway Commission framework. You can refer to my video, the link is given here, and I will also try to give link in the description. This is about the introduction of the COSO framework. The ISO 31000 is about the risk management. This we will cover inshallah in another video. So let's understand this standard further by reviewing the implementation guide. Governance framework models and requirements vary according to organization type and regulatory jurisdictions. How an organization designs and practices the principles of effective governance also depends on factors such as its size, complexity, life cycle, maturity, stakeholder structure, and the legal requirements to which the organization is subject. Next, the Chief Audit Executive contemplates whether the current internal audit plan encompasses the organization's governance process and addresses their associated risk. So this is a very important area, and actually this is why the Chief Audit Executive needs to keep mapping its audit plan as per the current and potential risk which are highlighted by the top management and the key ERM team and relevant to his own assessment. That mapping will help in keeping that audit plan current actually. We started this video by having a concept of that governance does not exist as a set of independent processes and structures. Rather, governance, risk management, and control are interrelated. For example, effective governance activities consider risk when setting a strategy. Equally, risk management relies on effective governance. Example, tone at the top, risk appetite, tolerance, and culture, and oversight of risk management. Likewise, effective governance relies on internal controls and communication to the board about the effectiveness of those controls. The Chief Audit Executive may review the board and committee charters as well as meeting agendas and minutes to gain insight into the role the board plays in the organization's governance, especially regarding strategic and operational decision making. The Chief Audit Executive may also speak with others in key governance roles, for example, chairman of the board, top elected or appointed official in governmental entity, chief ethics officer, HR officer, independent external auditor, chief compliance officer, chief risk officer, etc., to gain a clear understanding of the organization specific processes and assurance activities already in place. If the organization is regulated, the chief audit executive may want to review any governance concerns identified by regulators. Understanding of the governance is very important. It is the foundation for a discussion with the board and senior management about the definition of governance and the nature of governance processes within the organization, the requirements of standard 2110, the internal audit activities role, any changes to the internal audit activities approach and plan that may improve its conformance with the standard. The alignment of expectations. This discussion will help ensure agreement and an alignment of expectations with the board and the senior management about what constitutes governance so that an appropriate internal audit plan and approach can be executed. Let's have an understanding of the considerations for implementations. Governance processes are considered during the internal audit activities, risk assessment, and audit plan development. The chief audit executive typically identifies the organization's higher risk governance processes, which are addressed through assurance and consulting projects described in the final audit plan. So when we got off to a start, we read the main requirement of the standard on governance. This specifically identifies the internal audit activities responsibility for assessing and making appropriate recommendations to improve the organization's governance processes for number one, making strategic and operational decisions. To evaluate an organization's governance processes for making strategic and operational decisions, the internal audit activity may review past audit reports, board meeting minutes, board policy manual, or related governance documents, which can help provide an understanding of how decisions are discussed and ultimately made. This review typically reveals whether established, consistent decision-making processes have been developed. In addition, interviews with departmental heads may reveal what processes led to strategic and operational decisions. Overseeing risk management and control. To determine how an organization provides oversight of its risk management and control activities, the internal audit activity typically reviews the processes for conducting the annual risk assessment. The internal audit activity may also review minutes from the meetings wherein risk management strategy was discussed, as well as previously conducted risk assessments, and may review key risk management personnel such as compliance, risk, finance officers. The information obtained can be compared to benchmarking and industry trends to ensure all relevant risks have been considered. Number three is promoting appropriate ethics and values within the organization. To assess how an organization promotes ethics and values both internally and among its external business partners, the internal audit activity reviews the organization's related objectives, programs, and activities. These could include mission and value statements, code of conduct, hiring and training processes, an anti-fraud and whistleblowing policy, a very important policy, a hotline and investigation process. Surveys and interviews may be used to gauge whether the organization's efforts result in sufficient awareness of its ethical standards and values. So the number four is ensuring effective organizational performance management and accountability. To evaluate how an organization ensures effective performance management and accountability, the internal audit activity could review the organization's policies and processes related to staff compensation, objective setting, and performance evaluation. The internal audit activity may also review the associated measurements like KPIs and incentive plans, for example, bonuses or promotions, to determine whether they are appropriately designed and executed to prevent or detect unacceptable behavior or excessive risk taking and to support actions aligned with the organization's strategic objectives. Number 5 is communicating risk and control information to the appropriate areas of the organization. To appraise how well an organization communicates risk and control information to appropriate areas, the internal audit activity could assess internal reports, newsletters, relevant memos and emails, and staff meeting minutes to determine whether information regarding risk and controls is complete, accurate, and distributed timely. Surveys and interviews could be used to gauge employees' understanding of their responsibilities over risk and control processes and the impact to the organization if those responsibilities are not fulfilled. Typically, during assurance and advisory engagements, the internal audit activity also evaluates how the area under review communicates risk and control information. Last and number 6 is coordinating the activities of and communicating information among the board, external and internal auditors, other assurance providers, and management. To assess an organization's ability to coordinate activities and communicate information among the various parties, the internal audit activity could identify the meetings that include these groups, for example, board, audit committee, and finance committee, and determine how frequently they occur. Members of the internal audit activity may attend the meetings as participants or observers, and they may review the meeting minutes, work plans, and reports distributed among the groups to learn how these parties coordinate activities and communicate with each other. To assess and recommend ways to improve governance practices, how internal auditors can act. Internal auditors can act in a number of different capacities to assess and recommend ways to improve governance practices. Assurance role: they may provide independent, objective assessments of the design and effectiveness of governance processes within the organization. Consulting role: in addition to or instead of providing assurance, internal auditors may elect to provide consulting activities, consulting services. This may be a preferred approach, particularly when known issues exist or the governance process is immature. Whether providing consulting or assurance services, the chief audit executive may decide to use continuous monitoring methods, such as assigning internal auditors to observe meetings of governance related bodies and advise them on an ongoing basis. So why is a single audit of governance is not attempted? Usually a single audit of governance is not attempted. Rather, the internal audit activities assessment of governance processes is likely to be based on information based or obtained from numerous audit assignments over time. This is also because governance is not part of one function or activity. It is embedded in various processes and practices. So how we can demonstrate conformance with standard 2110 governance? The conformance may be documented through separate internal audit reports on individual governance processes or an overall report on governance that includes assurance-based assessments and recommendations from consulting services. Documentation may also include the minutes of a board meeting during which the chief audit executive discussed the internal audit activities overall assessment of governance practices. Board meeting materials may provide evidence that the board was appropriately informed about compensation and incentive packages and that it monitored the performance of senior level executives. Statements of acknowledgement signed by staff and business partners demonstrate the organization's efforts to promote awareness of its ethics and values. So let's conclude this standard and understand the overall what this standard requires from us. If an overall governance assessment is appropriate, it would take into account the results of audits of the specific governance processes. Governance issues arising from audits that are not specifically focused on governance, such as strategic planning, risk management processes, operational efficiency and effectiveness, internal control over financial reporting, risk associated with IT, fraud, and other areas, compliance with applicable laws and regulations, the results of management assessments, for example, compliance inspections, quality audits, control self assessments, the work of external assurance providers, for example, legal investigators, government auditors, journal offices, and the public accounting firms and regulators. The work of internal assurance providers or second line of defense function, for example, HSC, compliance, and quality. Other information on governance issues such as adverse incidents, indicating an opportunity to improve governance processes. During the planning, evaluating, and reporting phases, the internal auditors consider the potential nature and ramifications of the results and ensure appropriate communications with the board and senior management. So that concludes our review of standard 2110 governance, an all important standard. Thank you so much for watching my videos. Share these videos with other professionals so they also get benefit of these, and please subscribe my channel. Thank you so much for watching.